So I want to say thank you, everyone, so much for being here this evening. Thank you for coming to this month's webinar. As you can see, we're going to be talking about understanding your credit. So my name is Chelsea Risco. I'm going to be your guys' host this evening. I am the e-learning specialist here at Pioneer Federal Credit Union. I've been with Pioneer for 6 years now. One of those has been in our branches, and 5 of those years have been in our learning and development department. I'm very passionate about connecting with our community and members, especially by offering these opportunities to learn and understand finances a little more. So thank you again so much for being here. Also joining us tonight is my leader and financial capability coach, Claudine DeTorres. She's going to be assisting this evening with questions throughout and towards the end. I also have Tiffany Erlano on here with me, who is making sure you guys are taken care of in the chat and that you're getting the links you need to our resources page. If you can see in your chat, there should be a link she'll be putting in there in just a moment in case you haven't been to it. Make sure you go there. That's where we're going to put all of our resources that I mentioned. Perfect. Thank you so much, Tiffany. Speaking of those questions we talked about with Claudine, I do want to remind everyone that if you have questions throughout the session tonight, go ahead and put those into the Q&A box. That way we can keep track of those questions, make sure they get answered. And we'll try to allow enough time towards the end to make sure we can get through all of those questions and get them answered for you. Okay, there's all the housekeeping. Now, let's talk about our webinar this month. So we're going to be talking all about credit, and credit is something we all need to know about regardless of our circumstances, because even if you don't use credit, others may need to know about your credit worthiness to feel comfortable to extend services to you. So today we're going to talk about credit and why it is important. We'll look at what's on a credit report and tell you how you can get a copy of your report. We'll talk about credit scores and how they are calculated. And lastly, we'll give you some tips for building credit and cover some common credit myths. So before we get started on the ins and outs of the credit report and scores, it's important to take a step back and consider why credit is important in the first place. So to put it another way, if you have damaged credit, what areas of your life could be affected? So go ahead, excuse me, go ahead and put your answers in the chat. You can open your chat box and share what you think. Again, the question is, if you have damaged credit, what areas of your life are affected? Whether you know from experience and you've come out of that, or you've heard about how damaged credit can affect someone's life. Just want to see what you guys have in the chat here. And I was going to mention, when you are sharing the chat, make sure you change that little to option. There's a drop down. If you want other people to see your answers as well, you can choose to all panelists and attendees. Otherwise, just the 3 panelists and I will be able to see your answer, which is totally fine too, but I just wanted to let you know. So I'll read aloud some answers that are coming in. Kimberly mentioned marriage. Absolutely. That can be a big thing. Leah said applying for loans, rentals, etc. Julie shared housing. Yes. Kimberly, where you live. Yes. Crystal Walker said everything, jobs, loans, and rentals. Yes. A lot of things, right? Any other thoughts? Areas of your life that are affected. Kristen added career opportunities. Adam said rent rates, ability to get a rental, job opportunities, can lose a job in some cases if credit score goes too low. Your ability to get loans, ability to enter certain colleges, insurance rates. That was a very good list, Adam. Thank you for sharing. Martin added home buying. Yes. What a great list. I think you guys hit all of the points we're going to go through. So let's go through those together. So good credit may help you land your dream job. Did you know that 60% of employers do credit checks? This doesn't mean that having bad credit will prevent you from finding a job, but it is often used to determine if you'll be offered that job. It's important to note that employers only have access to your credit report, not your credit score. So whether or not your credit is a factor in gaining employment largely depends on the industry. If you work in finance, it could be a big factor, as well as jobs that require security clearances, like TSA at the airport. Good credit comes into play when you rent or buy a home, which you guys also touched on. So consider that when you rent, you're not actually borrowing money. So you're not going to go through like a mortgage loan process, but most management companies will still want tenants to have a decent credit score to show their credit worthiness and that they can make payments on time. And then good credit might mean getting a loan when you need it. Anytime that you need to borrow money, your credit's going to play a pretty big role in determining the terms of that loan. But what happens if you want to borrow money and you don't have good credit? Have you guys ever seen or heard advertisements that say, got bad credit? No problem. I just want to see a quick raise of hands. I think everyone's going to raise their hands. Have you ever seen those ads? I'm pretty sure there's a song that goes, no credit needed at Combs Car Corral. Now, if you live in Idaho, you know that there is in fact a dealership that tells you don't even need credit, right? Okay, so I'm seeing some people raise their hands. Thank you for participating in that. So what do you guys think will happen if someone gets a loan from one of those get cash fast places that we hear about? What do you think would happen? I want to hear in the chat again, if you guys don't mind sharing some more. What do you think will happen if someone gets a loan from one of these get cash fast places that we hear about? How will it affect the person getting that? Oh, here we go. Yes, you guys are on it, right? Julie said massive interest rates. Yes, Crystal, huge interest rate and high fees. Kristen said super high interest rates. Yes. Adam, decades of hard work and good luck to escape that cycle. Yeah, the cycle, right? You can totally get stuck in that. You said outrageous rates. You guys are all correct. Yes. When you do go to one of those places, you're probably going to get approved for a loan, which is great, but it's going to be extremely high rates. So, for example, you might go to an auto loan or you might get an auto loan, I should say, at 25% interest. That's just wild to me. That might translate to a monthly payment that is double or triple what someone with good credit might pay. So good credit may mean not paying extremely high interest rates. So for example, let's take a look at these two people applying for a mortgage. So we have Diego and Angela. Let's say that between these two, all the other underwriting pieces are equal. So the amount of income, the stability of income, et cetera, that's all the same. They may both get approved, but the one with a lower credit score will typically pay a higher interest rate. Notice Diego's score there and the interest rate compared to Angela's. Yeah, so while it may not seem like a big difference right there, spread that out over 30 years on a large loan, and it translates to tens of thousands of dollars in our example. So good credit alone saved Angela more than $34,000. So Diego might be better off focusing on improving his credit score first. And it may take some time, but it's definitely going to be worth it in the long run for sure. Okay, let's turn our attention to the credit report. Since it contains some of the most important pieces of information that lenders are going to look at when they're going to determine if they will offer a loan and at what rate, like we were just talking about. So let's start with talking about the bureaus. There's three major credit bureaus that collect your information. First is Experian, then we have TransUnion, and lastly is Equifax. So when it comes time to apply for credit, you're most likely not going to know which bureau your financial institution uses. I will say for the record, Pioneer uses Experian, so now you know. But if you go somewhere else, you probably won't know. But it is important that you review all three reports before making a large purchase using credit. In the case of a mortgage, the lender will usually review all three of these reports. Also, each of the credit bureaus may not contain the exact same information. In many cases, actually, the information will vary slightly. So very important to take a look at all three of them. So what is on your credit report? Well, first, there is identifying information. This is going to include your name, your social security number, your date of birth, your address, and your employer. And this is used so that whoever's accessing your credit can match up your information to avoid fraud. It is not used as part of your credit score. Second is the money you borrow. So this is going to include details related to credit cards, consumer loans, auto loans, mortgages, student loans, and other types of debt. This report will contain information about when you open the account, whether you pay on time, your debt balance, and your credit limit. Also, late payments will show up if you are 30 days or more late. All right, third is your collection records. So other household bills generally don't show up on your report. Some of those might be like medical bills or rent. However, if you stop paying on any of these bills, they can actually be referred to a collection agency. And then once in collections, the collector can actually report that debt to your report. So that will follow you around as well. Fourth, anytime someone accesses your credit report, it's called an inquiry. There's actually two types of inquiries. There's a hard one. That's anytime your credit report has been reviewed for the purpose of extending credit, such as applying for a loan. And then there's a soft inquiry. This includes checking your own credit report yourself or a creditor reviewing your credit report, or a prospective lender obtaining your credit report for promotional purposes. And then maybe they might make you an offer based on that. But I will note, only hard inquiries are going to affect your credit score negatively. And finally, there is an optional consumer statement space on your credit report. And this is a statement that a consumer, meaning you can add to your credit report a max of 100 words of a statement. It doesn't factor into your credit score, but when someone manually reviews your credit report, they can see that statement and maybe take that statement into consideration when determining if you will be offered that loan. So I haven't seen those much myself, but it is an option, just so you know. So that is what's on your credit report. But what is not on your credit report? Your credit report does not contain information related to your income, to your assets, or to your savings. So a person can have excellent credit, but have $0 in their savings. Or on the other hand, they could be very wealthy, but have really poor credit. The point that lenders will often look at these items, like your income, your assets, your savings credit, is when they're making lending decisions. So if you guys know Dave Ramsey well, he doesn't really care about credit scores. And so that would be your person who might be wealthy and have a poor credit score. But if you are going to need to be extended credit for an emergency or for your future purchases, you definitely want to make sure you're continuing to work on that score, or you might not get that loan. Ooh, lots of talking. Your turn. So I'm sure you're aware of your income, your assets, and your savings, but what about your credit? Raise your hand if you have seen your credit report within the last 12 months. I want to see how many of you have seen it in the last 12 months. We're talking a year. Think back to 2020. None of the bad stuff, just the part where you looked at your credit report. Okay, so about a third of you guys have. Okay, let's talk about the last 6 months. Has anyone looked at their credit in the last 6 months? Raise your hand. Okay, so now we're down to about, most of you have. Okay. So you guys are keeping on top of your credit. Very good. Very good. Okay, well, if you are wanting to take a look at your credit, maybe you weren't the person who raised your hand, or maybe you just want to look at it again, the best place to get your credit report is annualcreditreport.com. It's the website that was set up as a result of the Fair Credit Reporting Act that states that you are entitled to a free copy of your credit report. That act also says that you have the right to see a copy of each of the 3 credit reports from the 3 bureaus we just talked about. You get access to those for free every 12 months. However, right now, due to COVID, you can actually get a copy of your reports weekly. So I would definitely take advantage of that. But I do want to say, keep in mind that what you get from annualcreditreport.com, it's only going to be the report. So only what we've talked about so far. It's not going to include your score. But like I mentioned before, it's still really important to be reviewing the items on your report for accuracy. So what happens if you find something's inaccurate? Well, you can actually dispute it. And on that resources page, I'll have Tiffany share that again in the chat. On our resources page, you can actually see that there's a link for the Consumer Financial Protection Bureau, where you can learn more about the process of disputing inaccurate information. So if you're seeing payments that were made on time, you're seeing loans that are still on your report that are actually paid off, those are definitely things you want to bring up and get corrected, especially if they are affecting your score. And one other tip is, if you anticipate the need to borrow money, especially for a large purchase like a mortgage or a big car loan, definitely suggest that you take a look at your credit at least 6 months prior, so that if there's any errors, you have the time to correct them before you apply. So that way you have the best score possible. So when you review your credit report, you're most likely going to notice some accounts that no longer are on there. Or that you no longer have, they're going to be on there, but they're going to show as closed. And that's maybe an old car loan, for example. That's because information stays on their credit report for an extended period of time, not just on active loans and accounts. So you're going to see things that are closed to really show the full history of your credit. For example, on the negative side, most negative items stay on your credit report for about 7 years. And by the way, that's 7 years since your last activity. It's actually a pretty common misconception that when a debt is sold to a collection agency, the 7-year time frame restarts at that point. So in theory, collection agencies could sell debts back and forth to each other, and then the debt would never come off the credit report. But in truth, if an account is sold to a new collection agency, it's not supposed to start that 7-year clock again. And if it does, this is another opportunity where you can file that dispute we talked about and get that removed from your report. So as you can see here on the screen, late payments, student loans, defaults, foreclosures, and Chapter 13 bankruptcies are going to be on your report for 7 years. The Chapter 7 bankruptcy stays on the report for 10 years. And here's a quick difference between the two. A Chapter 13 is going to be a court-approved payment plan. That'll stay on for 7 years. And then the Chapter 7 is going to stay on for 10 years, which is kind of just we're all done with it. So just some information, if you have gone through bankruptcy or if you come to a place where you need to consider it, just remember it is going to be on your credit for a pretty long time and it will affect your score. So just keep that in mind. But on the positive side, good information, such as all your on-time payments, on your credit cards and mortgages, those can stay on your credit report forever, which is a good thing. So having more good information helps strengthen your credit history and increase your credit score. So now that we've covered what your credit report is, let's talk about how all of that information adds up to equal your credit score. So a credit score is a 3-digit number that tries to quantify the likelihood of repayment. It's meant to reflect your credit risk. So the FICO score is the most widely used scoring models. FICO scores have different names at each of the credit reporting agencies. All of these scores, however, are developed using the same methods by Fair Isaac. Fair Isaac is the FI in the CO there, FICO, and have been rigorously tested to ensure they provide the most accurate picture of credit risk possible using credit report data. So the lower the score, the higher the risk. So when you have a low score, you're going to pay more to borrow money. And when you have a higher score, you'll be offered a better interest rate, which will cost you less because the lender is not taking as much of a risk lending to you. So kind of puts it all together, right? Why people with lower scores are charged those extra rates is because the company has to cover that risk that might be involved with not getting paid back and taking a loss. Okay. Join me in the chat again, if you could answer this question. What are the factors that impact a credit score? Whether positively or negatively, what factors impact a credit score? I see a couple comments coming in. Again, the question is whether positively or negatively, what factors impact a credit score? Okay, so Leah said on-time payments, yes. On the flip side, Kimberly said late payments, yes. Claudine said last 24 to 36 months of payment history does weigh significantly. Adam said age of credit, amount of credit, percentage of available credit used. Good, good. Crystal said on time or late payments, closing accounts, high debt to ratio income. Ooh, good job. Or I said that backwards, high debt to income ratio. High credit card usage, credit card inquiries, the amount of trade lines, says Martin. Kristen says maxing out credit cards hurts your score. Yes. Julie said hard inquiries. Adam said types of credit. Oh, you guys are so good. It's like you kind of know about credit. Why are you here? I'm just kidding. I'm so glad you're here because I'm hoping that we can break this down even more so you can really see what each of those really means. So let's go ahead and jump in. So the first one, well, let's actually talk about the full thing first, because you're going to see that there's percentages on the screen that weigh into each of these items. And all of these are put together to create your 3-number score that we just talked about. So each of these things is specific to you, specific to your activity. So that's why you have your own credit score. So let's break down each one. So 35% is going to be payment history. So the largest impact on your credit score is your payment history, or how well you pay back your debts over time. This includes delinquencies and public record. And of course, your score is going to be built by making those on-time payments. 35% of your score is made up by this. So if you're making late payments, it's going to affect your score much more than these other things listed. So making sure to make those on-time payments is super important. Okay. Next at 30% is amounts owed and use of available credit. This is the amount of credit you're using versus what's available to you. So think about a credit card. Let's say there's $1,000 limit on it. You're using 300 of it. That's the balance on the card right now. Perfect, because we want to say the rule of thumb is a target of using only 30% of your available credit. So add together all of your credit, Try to keep it at 30% or below. Next, at 15% is your length of credit history. So the longer you have established a good credit history, the more trust you've built up. That's why you hear not to close those older credit cards, right? We are going to touch on that a little bit later. Next is 10% for types of credit used and credit mix. So you guys touched on this as well in the comments. Your score is going to be impacted based on the types of credit you have, such as revolving lines of credit or fixed installment loans, meaning you have those monthly payments that you've agreed to each month. You can build a stronger score by having a more diverse portfolio, having a mortgage, a car loan, installment loan, some kind of revolving line like a credit card or a line of credit. The more diverse, the better your score will be. And then last up is 10% for new credit. If someone's applying for too much new credit, that can actually indicate that they don't have a plan for how they're going to pay that debt back and that they're living off their credit, meaning they might be paying their bills with their credit card. This can be a really big red flag and can negatively affect your score. So remember to stay away from that habit as well. So all the information we just learned about can be applied specifically to your credit report and reviewed with you during a Pioneer credit checkup. We offer this for free to our members and our community, so you don't have to be a Pioneer member to take part in this. But what we're going to do is we'll take a deep dive into your credit report, and then we'll help you create a customized action plan so you have steps that you need to move forward with improving your credit. We can also take this time to identify opportunities that help you take advantage of your already great credit. And a link to request your credit checkup is actually on that resources page. So I'm going to have Tiffany share it once again, just to make sure it is at the bottom of our chat so you guys can access it. Thank you. Or of course, if you would rather, you can also go to anyone in our branches or our contact center, and they can help you get started. So there's the link to the resources page, and on there you'll see the Pioneer credit checkup. So here's the QR code. If you're more of a QR code person, you can actually take your iPhone, turn on your camera, put the QR code there on the left in the screen, and it will pop down a little link so you can get to our resources page. Or if you have a Android, I believe there's an app for that you can scan it on. But give you guys just a moment for that. I'm also going to take a quick drink of water. And we'll go ahead and move along. Okay, so what if you don't have a credit score at all? What kind of activities can you do to build your credit? Well, here's a quick list for you. You can build credit by opening a credit card, using a credit card to make one already budgeted for expense and then paying it off in full is by far the easiest way to build a good credit history. Sometimes it may be a better idea to get a secured credit card first, just because that might be what you have to do if you're very new to credit. But here's the thing, credit cards can get a pretty bad rap because many people only see them as a spending tool when really they could be used and should be used as a credit building tool. So be sure to check out the tip sheet on the resources page to learn more about using a credit card wisely to build your credit. Okay, secondly, you could get a secured loan. And that's also a good way to build credit. With this type of loan, you actually make a deposit and then you make payments on a loan. So the advantage here is that you can usually set up payments automatically for this. And here's a plug for next month's webinar, where we'll be talking about automating your finances and making them work for you. So you can sign up today on our webinars page on our website for that, or wait to get a follow-up email from this session where the link will be there as well. Okay, next up is a store or retail card, or like gas cards. They're usually easier to obtain than like a Visa or a MasterCard. Many merchants will approve consumers with at least 6 months of activity and one active Visa or MasterCard. But keep in mind, these cards typically carry interest rates in excess of 20%. So it's even more important to pay balances off in full. Be careful though, because of course there's temptation that comes into this. So if you get a card from a store that you like to shop at, you might be tempted to charge more. So be very honest with yourself and see if that's the best option for you. And then we have a couple choices in terms of using someone else's credit to build your own. So you could get a co-signer for loans, or a joint account for credit cards. Both parties are legally liable for this debt. And if you plan to use a cosigner, you need to ask yourself, are you ready to jeopardize the relationship if something goes wrong and you're not able to make a payment? So be sure you think about that before you jump into that option. The last one that we have is being added as an authorized user to a credit card. It's generally a much safer way to build credit because the authorized user is not liable for any charges. But keep in mind that any activity on the account will show up on your credit report and be reflected in your credit score. So remember, what they do will affect you, and that can be negatively as well. It's also important to note that the credit reporting system is voluntary, which means lenders actually decide whether they want to report their accounts to the credit reporting agency. So you might want to check with the lender before using that as a credit building tool to make sure that you actually will be shown as an authorized user and actually gain benefits from that to your credit. So just keep that in mind as well. So let's talk about some myths. There's a lot of misinformation out there when it comes to credit and credit scores. So I want to hear your guys' input on this one. Are there things you've heard about credit that you're not sure about, whether it be statements or advice that maybe you've questioned? I'd like to see you guys share that in the chat. We'll kind of just see what you guys have to say, and maybe we'll come back to them in our Q&A time. But we'll go ahead and review some for now. So do you guys have anything that someone has said or that you've heard that you've been like, what? Is that true? Does that really make sense? So let's see what you guys have to say about that. Let's see, Claudine did add retail cards equals finance accounts versus credit cards from credit unions, and banks are seen as a prime lender card, which is a better source of credit. Too many finance accounts will lower your score. Ooh, good input. Thank you, Claudine. Okay, Kimberly said, once you pay off a credit card, is it good to close it or leave it open? Ooh, perfect. You're teeing me up, Kimberly, for our next slide, which is great. Julie said, no credit is bad credit. Ooh, that one's a good one. Anyone else? Statements or advice even that maybe you've questioned, something that someone said will help and you're just not sure? I'm going to share a couple myths after this as well, but I want to make sure we're covering everything for you guys. Does it hurt to call on credit card and lower your credit limit? Ooh, that's a good question too. Okay, we'll see how many of these. Oh, one more. Have been told in poor times that failure to pay debt will put you in jail if it stays around long enough to fall off your report. Interesting. That, of course, is a lie by a collection agent, you added, Adam. Yeah, that sounds like some fear tactics there. That's interesting. They're a little bit desperate, I guess. Okay, well, let's look what I prepared. So myth number one is something that we hear a lot. Back to Kimberly's what she shared is closing a credit card will hurt my credit score. This is more like a half myth. It all depends on the person's situation. So let's take a look at this example. So let's look at Sarah's situation. She has 3 maxed out cards. So she's using 100% of her available credit. It is maxed out. So that utilization portion of her score is going to suffer. So she decides to pay off the first card. So her available credit increases and her score actually improves because of that, because she's not maxing it out. But then she decides to close it so that she's not tempted to use it again. But once she closes the card, her available credit on the card disappears. So again, she's back to having a utilization ratio of 100% again, and her score goes back down. Remember, the other 2 cards remain maxed out. So in Sarah's case, closing her card has hurt her credit score, had a negative impact. Now let's look at Katie. In Katie's case, she has 5 open accounts, and her starting utilization ratio is great since she's using very little credit. Closing one of her cards will have very little effect on her utilization ratio. So her credit score will not be affected. So Katie is an example of when closing a card would have very little, if any, impact on a credit score. Now, a few other factors that could impact your score as a result of closing a card would include the length of time that you've had the card open and the credit limit. So try to avoid closing your oldest trade lines as well as cards with higher limits, because that's going to affect the amount of your available credit, which I think is a really, really good point to make. Okay. How many of you guys have heard, let's do raising hands again. How many of you guys have heard that you don't want to check your credit too often because it will hurt your credit? So a few of you, okay. About a fourth of you guys have heard that. Okay, right. I've also heard it before. This myth is derived from the fact that applying for credit too often can hurt your score, but checking your own report, like we mentioned before, is a soft inquiry, so it has no bearing on your credit score. You can check your own report or score as often as you'd like. It will not change your score because it is that soft pull we talked about. Okay, so that's our myths. Let me go back to the chat and see if there's anything we're going to bring over to the Q&A. I want to make sure I don't lose it. Oh, Ivan, I see that you want that. I will see if Tiffany, are you able to maybe get on our website and copy that Zoom link? It should be in our future webinars. I'd love to have you guys there. It should be a really good one, talking about how to utilize your online banking. Ooh, that's a good question, Leah. Okay, we will get to those in just a moment. What I do want to point out to you guys is to remember that Pioneer members also have access to our very trusted financial wellness partner, GreenPath. Their certified counselors can also go through your credit report with you and address your budget and other areas of concern to help you determine the right path for your financial wellness. And a link to GreenPath is going to be on that resources page as well. They are a really, really great company. So whether you go with us for a free credit checkup or you go to GreenPath to have them work through your credit, just make sure you're reaching out to somebody, especially for GreenPath if you're in a place where you're feeling very lost, very overwhelmed, feeling like you don't know how to get back from, having a really low score. They are going to really take care of you, and that one of their counselors will work side by side with you. Okay. Oh, Claudine's doing some answers in the chat. Okay. So today we talked about quite a few things regarding credit. So now it's time for you to take action. Again, I'm going to say if you haven't checked your credit report in a while, go ahead and go to annualcreditreport.com and do that today. Then get your credit checkup with Pioneer and get started on a customized action plan, or reach out to GreenPath and get in touch with one of their counselors so that you can start an action plan towards building your credit or rebuilding it if you're in that situation. Again, if you haven't already visited the resources page, there are everything we've talked about and a couple additional resources there for you to find some ideas on how to build your credit, a handout that will help you remember everything we talked about in case you want to revisit it again. Of course, this recording will be available on the webinars page on our website.